Good morning or good afternoon, everybody, and thank you for joining us today. My name is Helen Carbosso and I'll be your moderator. Obviously, things are rapidly changing with the COVID-19 situation, and today we wanted to provide some insights into the government stimulus packages available, and in particular, the recently passed JobKeeper payment. Today, we'll have a short presentation from Andrew Sykes, Business Advisory Director at RSM. After this, we will have time for your questions. Can I please ask you to enter these in the Q&A box, which you should see at the bottom of your screen. We also have Tracy Dunn on hand to assist in answering these questions. And now I'll hand over to Andrew to talk us through some of the recent stimulus packages.
Good afternoon, everyone, and welcome. Thank you for taking some time out to listen to our update on the economic stimulus packages. There's been a number of stimulus packages released. We're going to have a look at a few of them today. So we are going to have a look at can we just move the slide on? Thanks. So the stimulus packages that we've seen released are instant asset write-off and backing business investments. They're immediate deductions against this year's tax. The key ones we're going to look at today are the ones that are going to provide cash flow to employers and support employment. So we're going to have a look at the boosting cash flow for employers briefly. Most businesses are getting a handle on that, but it's worth a quick update and a couple of examples. We're also going to have a look in some detail at the JobKeeper payment. There is a lot of detail on this. RSM has developed a resource website, our coronavirus website, which is rsm.com.au/coronavirus. There's a ton of resources and calculators in there. If you just go there, it's all, you can download all of this. It's available for free. Just jump on there and download the reports for further detail. If we have a look at the boosting cash flow for employers briefly, it's a temporary cash flow support for SMEs who employ staff. So it's worth up to $100,000 back to businesses with a minimum of $20,000 as a tax-free payment. And it's available for businesses who turn over less than 50 million and who do employ staff and make eligible payments. So eligible payments are salary and wages, directors' fees, and other payments that you're required to withhold from. It will be delivered as a credit to your running account balance on the lodgement of your next activity statement, whether you're a monthly or a quarterly payer. It's going to be based on the PAYG between March, April, May, and June. It'll be delivered as a credit of 100% of the PAYG over this period. So quarterly payers will get 100% of the PAG withholding that they show on their quarterly BAS on lodgement. Monthly lodgers will get 300% of the month of March, the PAYG for that period. First payment capped at 50,000, and the second payment will be the same as the first. So if you're entitled to 30,000 in the first payment, the most you'll get in the second payment is 30,000. Small employers are going to be entitled to a minimum of $10,000 in the first payment and a minimum of $10,000 in the second, and they won't get any further payment for the June quarter until they have paid more than $10,000 in PAYG for the months of March, April, May, and June. So we'll run through a couple of examples on that just to demonstrate how this is going to work. So if you're a small employer that remits $6,000 in PAYG quarterly, on the lodgement of your March activity statement on 28 April, you'll receive a credit of $6,000 against your obligation to pay $6,000. You'll have an obligation to pay $6,000, you'll receive a credit of $10,000, which is the minimum, against your obligation to pay $6,000 in PAYG. When you lodge your June quarter, assuming you have an obligation to pay a further $6,000 in PAYG, you'll receive a credit of $2,000, which is the excess over the $10,000 payable in the relevant months. Your second payment is going to be the same as the first one, which is limited at 12,000. It'll be paid in 2 instalments, one on the lodgement of the June activity statement and the second on the lodgement of the October activity statement. If we look at a mid-size employer now who's paying PAYG of 5,000 per month, if they're a monthly lodger, they'll receive a $15,000 credit applied to their ATO account on the lodgement of the March activity statement. So that's 300% of the March PAYG. Given that the PAYG will stay the same for the next 3 months, they'll receive a further credit in April, May and June of $5,000 for total credits up to and including the June BAS of $30,000. Their second payment will be limited to $30,000 and paid in equal instalments across July, August and September. The same employer as a quarterly payer will receive $15,000 on the lodgement of the March PAYG and will receive a credit to their running account of $15,000. In the June quarter, when they lodge their BAS, they'll receive a further credit of $15,000 against a PAYG obligation of $15,000. The second payment is going to be limited to $30,000 and it will be paid in 2 equal instalments in July and October. That's a brief run through of that. RSM has a calculator we've developed. It's available from our website and we can send it out to you as well. You can enter your PAYG for March in there, estimates of the ongoing PAYG, and it will tell you what your amounts payable and the timing of those. This shown there is the example. Just run through of $5,000 per month, and that shows when the payments will be made and when you're going to get them. If we now move on to the JobKeeper payment. So the JobKeeper payment is aimed at keeping employees connected with their employers. Estimated at about 6 million will be entitled to receive it over the next 6 months at a cost to the government of $130 billion. It's going to be delivered as a wage subsidy of $1,500 per fortnight for all full, part-time or long-term casual employees. A long-term casual employee being one who has been employed for 12 months as of 1st of March. Eligible employers are those whose turnover has dropped 30% relative to a comparable period in the prior year. So if we have a look in a bit more detail around what that means. So the basic eligibility is that drop of 30%. It's in comparison to a prior period, and it's where your business has been impacted by COVID-19. So if your business has monthly tax periods, it's going to be comparing your 30 April 29 activity versus your projected 30 April 2020. And it's going to be a month-by-month basis, and it will be on the same basis that you report your GST. So if you're a monthly lodger of GST, it'll be on a monthly basis. If you're a quarterly lodger of GST, it will be comparing 30 June 2020 versus 30 June 2019. So it's dependent on your tax period, and it is on the projected turnover for that period. And the basic eligibility requirement for a business is a drop of 30% if their aggregate turnover is less than 1 billion. Now, where the business has been impacted, but it's not able to meet this requirement, the ATO, so if you're not able to satisfy the relevant turnover test, e.g. you're a startup business or you're a business that may not have been in operation a year ago, you may be entitled to access an alternative decline in turnover test as determined by the Commissioner of Taxation. So we're still waiting to find out what those tests are going to be, but the Commissioner of Taxation has been empowered to issue guidelines for alternate tests So if you don't meet the turnover drop of 30% yet, because of one of those criteria, you may still meet it, but we will need to find out once the guidelines have been released. Eligible employees, include those that have already been stood down. You must have been employed as at 1 March and be an Australian citizen or permanent resident. As I said before, a long-term casual is one who's been employed by the business on a systemic basis for a period of 12 months or more. The start date of this is going to be 30 March, so it's already in operation, and payments will commence early May. So it's already started. Employers are required to pay the $1,500 per employee, and they will be reimbursed by the ATO within 14 days of the start of March. This is an employer-driven stimulus, so the employees will be required to register, and the employer will then provide certain information through to the ATO. The ATO will pre-populate the application with data already provided through single touch payroll, and then the employer will be required to confirm it. We don't have a registration process yet, but that is how it's going to work. So as an employer, you will need to, or employees will need to provide you with a nomination notice in the approved form. This is yet to be released, and it will advise you of their eligibility. You will then need to process the payment through single touch payroll and be reimbursed by the ATO in arrears. There is a requirement for monthly reporting on this, and superannuation is not compulsory on any top-up component. So when we talk about top-up components, it's probably best to consider an example. If we have an employee being paid $1,700 per fortnight, they will continue, as long as they're continuing to work, they will be paid $1,700 per fortnight, and the business will receive the subsidy. The employer will receive $1,500 per fortnight as a subsidy. In the alternate, we may have an employee who's being paid $1,000 per fortnight. That employee will now receive $1,500 per fortnight. $500 of it is a top-up component. Superannuation will be payable on the $1,000 in normal earnings that the employee gets, but it won't be payable on the $500 as a top-up payment. For eligibility for individual employees, they will only be eligible, so employees with multiple employers will only be eligible to receive the payment from one employer. Importantly now, the self-employed will be entitled, and under various entities will be able to nominate an individual to receive a payment. So if you are a sole trader or a self-employed individual that operates through an entity and you do not pay any wages, you'll be entitled to receive this as a payment. The types of payments that we are going to, or the types of entities that we will see, so sole traders or self-employed will also have to meet additional criteria. So they'll need to be a business entity that held an ABN on 12 March 2020, and on or before 12 March 2020, or such later time allowed by the Commissioner. That's a change that we've seen, but in general, before 12 March 2020, they will have needed to have lodged a 2018-19 income tax return that shows assessable income, or you will have needed to have lodged an activity statement after 1 July 2018 and before 12 March 2020 that showed GST taxable income, GST input tax income, some form of business income. And If you are that individual, you cannot be employed by the business entity or any other entity. When we talk about the individual, so for a sole trader, it will be the sole trader as the individual. When we look at other small business structures that are commonly used, partnerships, trusts, and companies, partnerships can nominate one individual partner, trusts can nominate one individual beneficiary, and the companies can nominate one individual director or shareholder. So where there are multiple family members working for one trust structure or one company or partnership structure, it'll only be one individual within each of those structures. So sole traders, individual, partnerships, companies, trusts, the one individual within it. It's reasonably complex, this scheme, so we're allowing plenty of time at the end of this webinar to ask questions on it. There are some other ATO supports that we will just briefly talk about, because these are the ones that businesses are accessing. Payment deferrals are critical, so hanging on to cash at the moment is very important. The ATO, if you contact the ATO and advise them you're impacted by COVID-19, they will allow you to defer payments by up to 4 months. And this is income tax, BAS, FBT and excise payments. They're also suggesting that you may want to consider moving to a monthly GST cycle. And with a monthly GST cycle, if you're getting GST credits, you can claim those back quicker. It doesn't impact your quarterly PAYG cycle, and you will have to stick with it for 12 months. A very important one is if you have been profitable previously and you're paying quarterly PAYG instalments, you can ask to vary the March quarterly PAYG instalment, so that's your payment against the current year's tax. You can ask to vary that to 0, and you can also request refunds for the previous 2 quarters. With these measures and also low interest payment plans and remitting interest on penalties, you will need to contact the ATO. So that's a high level summary of the cash boost and the JobKeeper and some other elements of support. Helen will now hand it over for questions and answers.
Thanks, Andrew. And I can see we've got one question that Tracy hasn't had a chance to answer yet, but in the case of a trust who has employees, will each eligible employee receive the $1,500 in addition to one nominated beneficiary who only derives income via trust distributions?
That is a very good question. From what I've been able to ascertain so far, I will say we are unsure of that, but the view would be that if it's an entity that doesn't employ anyone else. So we just need to wait for the guidelines to come out on that. I will say on this, Treasury did release some fact sheet, and it's now been withdrawn. So until we get finalised, we can't actually give a definitive answer on that.
Still some details to come. Andrew, do you have any information in relation to the employees or changes to the Fair Work Act?
No, we don't, unfortunately. All we know that is that the Fair Work Act is changing to allow all of this.
And do we know yet, can you pay a base wage now and pass on the top up after you receive it in May? So a challenge for some employees who can't afford to pay the excess now.
Really good question. What employers, we do know that employers are required to pay $1,500, and you can only claim the JobKeeper payment if you pay the minimum $1,500 per fortnight before tax to each eligible employee. So if you don't pay the $1,500, you won't receive the JobKeeper payment. We're not quite sure how that sits. You know, if somebody's normally paid, say, $3,000 per fortnight and they continue to work, if you paid them $1,500 now and $1,500 later, we don't know how that would work, but we do know that if you don't meet the $1,500 payment, you won't get the JobKeeper. It is quite a burden on employers. Example we've looked at is a sole trader, a smaller business that employs 10 people. They'll need to meet $15,000 per fortnight, so $30,000 over the 2 pays to be eligible for it.
Thanks, Andrew. I'll just leave time in case we've got people that want to ask a few more questions in there. But Andrew, is there anything else you wanted to highlight or update on whilst we wait and see if there's any more questions?
Yeah. One of the questions we've had coming through is if I cut my employees' hours down to say, 5 or 10 hours because that's all I've got, can they just say, well, I would rather stay at home and get the $750? The answer to that is no. So the employees need to maintain their employment to be eligible for the JobKeeper. As a consequence, if an employee resigns and you continue to pay them, you won't get reimbursed for it. So it's not an alternate to the job seeker payment where you don't have to work. So even if they're getting paid more, they can't sit at home and not work and still get this.
Thanks, Andrew. And a question on superannuation. Is that required to be paid on the $1,500 JobKeeper payment?
That will depend on whether there's a top-up component there. So if the employee's wage for the hours that they work is lower than the $1,500, so for example, if they earned $1,000 per fortnight, but you still had to pay them $1,500, they won't be eligible for super guarantee on that $500 top up, but you'll still have to pay super guarantee for the hours that they work, which is the $1,000 component.
Thanks, Andrew. I know it takes a little time sometimes to type those questions in, so we'll give them a few more moments and just check if there's any of those previously answered questions, Andrew, that you wanted to highlight for our other attendees.
There are a couple of other very good points. The concept of standing down employees is a fairly new one for plenty of businesses. Where you do stand down an employee, so they are not required to work, so they're no longer working in the business, they will still be paid $1,500 a fortnight. And for those ones, you won't have to pay super guarantee on that $1,500 at all. So as I said, it's a new concept for Australian businesses to a large extent. But it will keep the workers connected with the business and ready to go again.
Thanks, Andrew. I think that might be all of our questions for now. I'll just reiterate. Oh no, sorry, had a couple of last ones in there. Andrew, we're required to sign up all our eligible employees and do the prepayments for them, or can we choose which eligible employees we want to access the wage subsidy for? So an employer has many casuals who've refused to work during this time and therefore are on unpaid leave. And so they're requesting that JobKeeper be paid.
Yep, I think the answer to that would be, it discussed a little bit earlier on. If employees say, well, they don't want to work, I'd rather sit at home and get it. You still need to be employed by the employer. So if you have casuals refusing to work, well, they are no longer eligible because they won't be employed by the business. So the way to handle that would be to dismiss those employees. And you do need to be careful because if they become ineligible, you don't get reimbursed for it.
And are there anti-avoidance provisions to stop employers from delaying invoicing to satisfy the 30% decrease in turnover requirement?
Uh, well, yeah, it's a really good question because the ATO is very strong on the integrity of this. We've been advised that there may be substantial penalties, including criminal penalties in certain circumstances, if an entity enters into a contrived scheme for the sole or dominant purpose of accessing increased entitlements under this. So um, if you deliberately alter your business arrangements to reduce turnover, it may be considered a scheme. So yeah, very strong on the anti-integrity. I will also say that we have been advised that record keeping is very important in this. So you will need to be, if you don't keep the required records, you'll not be entitled to receive the JobKeeper, and in fact you may be deemed never to have been entitled to receive it if it later found you don't have the right records and be required to pay it back. So record keeping incredibly important for this. So you'll need to retain payment records, prepayments and post-payment records, and you must keep records that substantiate any information that you provide to the Commissioner in relation to this.
Thanks, Andrew. I will, as I said, reinforce Andrew's message earlier that we are updating all of the information as it comes to hand at our Coronavirus Resource Centre, and you can see the address there at rsm.com.au/coronavirus. We are still waiting for some further detail around JobKeeper payment, and so we will be continuing to update this there. But I think that might be all of our questions. So thank you very much to Andrew and Tracy and to everybody for attending today.